to the World Bank, economic growth in Sub-Saharan Africa should strengthen to 5.3% next year, lifting its forecast from the 5.1% projected earlier this year. The region was expected to grow 5.5% in 2015, up from a previous forecast of 5.2%. However, Absa Capital have trimmed their GDP growth projections for this year for several African countries as the weaker global environment continues to have a negative effect on much of the continent. For more on this, we are joined by Rydal Marcus, Africa strategist at Absa Capital. Rydal, thank you so much for making the time to join us. Now, why do you not share the optimism of the World Bank?
I wouldn't exactly say that we don't share the optimism, but what we are saying is that for 2013, I think much of the year is nearly gone, and we have sort of trimmed our expectations for this year slightly lower for the countries that we look at. Of course, like I said in my report, that for 2014 we are slightly more optimistic, and we do believe that with the slow and steady recovery that is likely and that we anticipate in the global economy, that will underpin the economic growth in 2014. However, for now, we believe that the possibility of continued weakness in some key commodities for some of our countries is likely to continue to constrain some of these countries, and also the weaker demand from Europe is at the moment still a constraint for our markets, though again for next year we are slightly more hopeful.
I do note that you, even in your hopeful nature, you still contain your projections to 5.1%, which is still marginally lower than the World Bank's 5.3%. But on another note, Rydal, the inflation numbers are coming out this week for a number of African countries. What do you think the long or the short to medium term monetary policy is going to be for Africa moving forward?
I think it's very diverse at the moment. I mean, there's a couple of countries in our region, like Nigeria, Ghana, even Zambia, where inflation is still a bit of an issue. In Nigeria, inflation is much lower than, it's the lowest in 5 years, but at the same time they've got some fiscal spending issues, so monetary policy is likely to remain tight for the next 18 months, maybe up to the election. Ghana's got high inflation, rising inflation, so monetary policy is likely to remain tight. And having said that, a couple of the countries, especially southern African countries like Mauritius, like Namibia, Botswana, etc., where inflation is not a real issue at the moment, at very moderate levels. So for those countries, we anticipate unchanged and very accommodative monetary policy at least until maybe the middle of next year.
Very quickly before I let you go, Rydal, your views on currency performances in the short term?
Currencies are likely to remain under pressure, and while you may not see a very sort of sharp depreciation in currencies, large current account deficits in many of our economies and also still weak commodity prices are likely to ensure that currencies are likely to trade slightly weaker very steadily over coming months.
Rydal, thank you so much for making the time to chat to us on the line. Of course, that was Rydal Marcus, Africa strategist at Absa Capital.